very esteemed members of the who have joined for this webcast of the GST and Indirect Taxes Committee. As all of you are aware, your committee week on week comes up with useful webcast for all of us to work on GST effectively. Today, we have here with us CA Navya Malhotra and CA Arvind Tangam, who are going to deliberate on those provisions of the GST which have been amended by the Union Budget to the Finance Act and those which are yet to be notified. It is required because let us know what are those provisions which are yet to be notified and those provisions which will be notified in future, as this will have a greater impact on the GST of the country. Esteemed friends, you will be glad to note that we have here with us today the Honorable Vice President of ICAI also. In fact, both of us are traveling together to Pondicherry for a meet with the members. And before I can deliberate further, I request Honorable Vice President to speak a few words and bless us all. Over to our most effective, very dynamic, and very caring and daring Vice President CA Charanjot Singh Nandaji. Sir.
Thanks a lot for your kind words, Shri P. Rajendra Kumar, the GST man. I can see Mr. Navya Malhotra ji and Mr. Arvind Tangam, along with all the participants, have come here to go home more enlightened. Ladies and gentlemen, it's always a great occasion to speak to the participants of the GST webinar. GST in itself has turned to bring so many laurels to the Indian community. And one thing I would like to tell you, that I was recently in Australia. I was in Sydney and Melbourne, and I was given to know that so many outsourcing programs, so many outsourcing assignments have now come to India from various countries. They are on return filing, on litigation, on opinion writing. So let us create an environment where we learn and at the same time we earn. We create professional development opportunities and more importantly, give the government assurance that we are in the interest of the revenue. Chartered accountants have been very keenly associated since 1st July 2017 when GST Act was promulgated. Chartered accountants across the country have given their helping hand and ensured that the law of GST becomes more empowered and taking into net various businesses and benefiting the exchequer. Thanks a lot for inviting me. I wish this webinar all success. Let's all work together to create a great environment in the country so that we can be on the top pinnacle of successful nations of the world. Thank you. Thank you so much. I give it back to Honorable Shri P. Rajendra Kumar, the GST man from Tamil Nadu. Just speak to him.
Thank you, Honorable Vice President, sir, for your kind words. Very esteemed members, I would not like to stand between you and our very esteemed speakers. In fact, Navya Malhotra is the Secretary NIRC, and I have known him from the inception of GST itself. He's very actively involved. He was also our special invitee, co-opted member of the GST Indirect Taxes Committee, and has also been an author. He's been a panelist. He has been a speaker on various programs of the committee. Arvind Tangam, he is from Coimbatore. Coimbatore is the Manchester capital of India, all of you are aware. And Arvind basically is very, very active on the GST front. He with his father, who is also a chartered accountant, both are in very active practice. And Arvind is one of our faculty, a leading faculty, I must say, in our committee's programs. I welcome each and every one of them. And I also welcome our secretary, Smita Mishra, madam, CA Praveen Chaudhary, Impreet Kaur, and technical support rendered by Ashok for this particular webcast. I hand over the proceedings in the hands of both the speakers. Navya will be speaking first, or Arvind Tangam? How are you decided among yourselves?
Navya will be speaking first, sir, and then I will take
wonderful.
on the next.
Okay, so over to Navya Malhotra ji. And as all of you are aware, since we are traveling, I may have to log out now, considering the fact that we are just reaching our destination. Thank you very much. Thank you. Over to Navya ji. Over to you.
Thank you. Thank you. Thank you so much, sir. Thank you. It is imperative and it is a considerable fact that you have played an instrumental role, Rajinder sir, in what GST has been shaped today. And when we have the august presence of our Honorable Vice President, it becomes a memorable occasion and a webinar for all of us. I'm sincerely thankful to the committee, to Arvind ji, and to all who are behind the show, who are making it the most desirable and the most important session for the day. It is all and all that we all know that not only this webinar is important, but GST becoming dynamic day by day. It is a very candid moment that when I speak about the amendments, and Rajinder sir, it is clearly a fact, Arvindji, that when I talk about amendments, that amendments are always there, and sooner or later, the budget not only comes every year in GST, but it comes every 3-4 months when there is a GST council meeting. So people are very crazy and excited about the budget when it comes to income tax because it is an annual activity. But for us, it becomes a regular activity when GST is in the considerable fact now. I also would like to acknowledge and thank the chairman of the Indirect Tax Committee, Sushil ji, for his kind consideration on these GST importers. And in his absence, we would also like to take his name for making what GST today. When we talk about the amendments, there are a lot of amendments that we when start speaking about. It is not only about the amendment happening today, or the amendment which is proposed, or which the amendment it is yet to be notified. But we also have to understand that the amendments not only get to correlate with the previous amendments come up suddenly, but they have been paving way since long. 52nd GST council meeting, then council meeting, they have all paved the way for the amendments that we see today. Arvind ji, who's co-speaker to me, will also appreciate one fact here, that when amendments come in budget or finance act to GST, they take time to get notified. When they take time to get notified, people, the assessee, the members, the students, the stakeholders, I should say, get panic. But the relief is getting prolonged because of the notification not coming up. Considerably, when notification is not coming up, people are ready to accept the relief. They know that the relief will be given, but the department yet denies it because they are not yet notified. This makes it and a situation where you know that there is a benefit, but you will not be getting the benefit because the time is getting short day by day. The time barrings are very near. And when we talk about these amendments, I will considerably talk about few of the amendments. Then Arvind ji will be following the amendments later. And then we will be putting up for the question answer round for the members. Let me start with some of the very important and key challenges. Let me share my screen. The screen has started sharing. Yes or no? Anandji, my screen is visible?
Yeah. Yes, Navya, your screen is visible.
Yes. Yeah, I like to stop my video for a while because or either I'm audible properly. Till then, I can continue. So when I talk about the amendments, I would considerably talking about one of the important amendment that is in section 16 subsection 4. So when I talk about section 16 subsection 4, this has been a key section when the problems of the assessee are coming up day by day. Section 16.4 has a relief by addition of a section called 16 subsection 5. This has been made via section 114 to the Finance Act. This has been made to the section 114, and it talks about 4 financial years. This talks about 4 financial years, that is the incepting 4 years: 2017-18, 18-19, 19-20, 20-21. The incepting 4 years of GST, when GST got implemented, were the gestational years when there were many technical glitches, many aspects of understanding which were, I should say, have multiple interpretations, or there were many circulars or clarifications which were awaited and they came up the way when GST got implemented. However, the time was lapsed to make the certain decision. So third, when decision came up, the time was lapsed. So the GST Council understood this matter, and at the end of this 53rd GST Council meeting, they were able to conclude that there should be the relief for 2017-18 to 2020-21, the 4 financial years, which required the most appropriate relief. To the hard and ironical fact, it remains that we have to accept that many of the assessees have already been carved out of this relief. Why? Because they might have paid the demands, or they might have settled to avoid any dispute or litigations. These 4 financial years, the relief as provided in this section talks about that when a person who has availed the input tax credit up to 30th November, up to 30th November 2021, 13th of November 2021, the relief is that the credit can get now interplay. Let us say 17-18, 18-19, 19-20. I'm putting an example, 2021. Here you have the input tax credit of 20 lakhs that has been availed in, let's say, 2021. Earlier, the provision talked about that the ITC shall not be allowed beyond September due date. September due date. So now this provision got stuck and it was changed to 30th November for the leading financial years. However, now when I talk about this 114 clause, the budget is amply clear that if you talk about these 4 financial years, even if you have availed the ITC till 30th day of November 2020-21, your credit shall be allowed to get interplay. You shall now be allowed the input tax credit even if for 17-18 you have availed in 19-20 or 2021, or in fact till 13th day of November 2020-21. People might be thinking, the members might be thinking that this is the amendment that is being very positive and also is very informative to the assessee. To an extent, they are now provided relief and they must be feeling happy. However, let us go and deeply understand that these amendments or these relief, when I talk about 16.4 by addition of 16 subsection 5, giving relief to first 4 financial years up to 30th November of 2020-21, will not only provide a complexity but a subjectivity also. When complexity comes up, you have to understand that 3B is a consolidated or a summary return. Please be acceptable and appreciate one fact that 3B never took the figures invoice wise in respect of input tax credit. Rather, it has always gone consolidated. When the figures got consolidated, you have to be very clear. When you want to seek this relief, when you are availing this relief, the officer would be seeking you that you provide the information which will be the backup data for this. Say, for example, you are saying 2017-18, there is a 20 lakhs of input tax credit which you have availed in 1920. Now this is very easy to say that this credit has flown from 1718 to 1920, as you are saying that the relief is till the November 2020-21. Please be very clear. Now the officer will seek that whether in which month or in tax period you have availed this 20 lakhs in 1920 and how 1920 credits are being carry forwarded. Also, there is a complexity that there may be a situation when you say that 17, 18, 20 lakhs credit has been availed in 1920, then you have to check the 3B of 1920 as well, wherein if you find a situation that there is only, let's say, 8 lakh rupees ITC in the 3B of 1920, the situation can be embarrassing as well as cannot be collated when the officer will sincerely reject the relief that you are seeking now. Herein, I would also like to highlight that when you talk about this 20 lakhs being flown to 1920, the officer would also be seeking invoice-wise backup. Invoice-wise backup would be playing a vital role in understanding that these are the aspects which will give you certainly more and more situations where the credit can also be on a FIFO basis or can be on a carry forward basis, or what you say is a credit that you have availed now but being shown later on. Whatever you might be saying the plea is, whatever might be your plea, the credit cannot be said that it will be availed simply. The credit cannot be said that it can be taken simply, but it has to be substantiated where there can be also a situation that you do not have the invoice-wise detail. I would also like to put forth here a word that there are situations where the credits might have been wrongly input in 3B. In the initial financial years, the office staff or a chartered accountant or even your assessee might have made a clerical errors which are not known to you now. When I say these are the aspects where the clerical aspects cannot be collated, the assessee now might be feeling perplexed or would be surprised when they are started preparing the data or the back working for this relief. Let us say you had to feed 1 lakh rupees and you have feeded 10 lakh rupees by mistake. Now you would be searching the 10 lakh rupees as the working, but you will not certainly never find that there would be 10 lakh rupees backup. I think you are now well aware that this is a situation of complexity. I would also like to highlight here that the input tax credit being flown here via 16.4, making way to 16.5, this is yet to be notified. Members might be feeling a situation of confusion that should we actually wait for this to get notified, or there are matters pending in the appeals, or there are matters pending for the order to be issued. What should be your recourse, or what should be your course? What should be your recourse? The act which is proposed is very clear that the relief is for the first financial 4 years. However, this is yet to be notified. When orders are passed, I certainly request the members to go for appeal. If it is still in the passing stage of orders, there is a situation when you can make a supplementary submission to the department that this should go for relief. The relief notification will yet to become. However, when it is will get notified, the relief shall be granted. To a certain extent, you also would like to believe here that this is merely a procedural matter. Officers have to accept and get convinced, because certainly sooner or later this will also get notified. I know you might be having certain queries, but you should have to mark the queries till the last and we talk about the queries, and we would certainly like to address all the situations here. Moving to the next important aspect. Moving to the next very, very important aspect is regarding section 74A. This is a new thing or a newborn baby of GST. I know that department was looking for this, but certainly the reason behind this could be understood when we understand the sections well in depth. The section came up and paved the way is 74A. This 74A came via provision of 134 of the Finance Act. 134 of the Finance Act. We all are well aware that certainly there were section 73 and section 74 in the GST Act. Cert 73 and 74 in the GST Act. This has been the section where the demands have been made. There is a section wherein the demand have already been made. When the demands are under purview, section 73 and section 74 was the provision which used to get triggered by the officer. Both the sections had a show cause notice in DRC 01. Both the sections had the section of 73 or 74 in show cause notice form DRC 01. We have to critically evaluate how and why 73-74 get into a new section called 74A. Both the sections got merged and developed into a new section named 74A. This section will come into force from financial year 24-25 onwards. However, there are likeliness that people would be taking the recourse to the courts that this section should be retrospective, or there are certain reliefs which should be also partially applicable to the retrospective effects. However, the act is clear that this shall take into recourse from financial year 24-25 onwards. So this might sound well, and there may be a now complex situation that you would be dealing in. When I say this new 74A is applicable from financial year 24-25 onwards, you have to make it very clear that this is saying determination of tax pertaining to financial year 24-25 onwards. Determination of tax pertaining to financial year 24-25 onwards. Now there will be a situation that you need to deal in 73, 74 and 74A, all three sections simultaneously, because the previous sections are still in force till financial year 23-24 demands are over, and 24-25 any demand which come up in DRC 01A or DRC 01 will be dealt in section 74A. Let us briefly understand what actually is now 74A. You have been critically dealing in 73, 74 since long. 73 and 74. There are certainly five elements which have always come up in 73 and 74. Sir, what were the five elements? Tax, ITC, refund. Tax, ITC and refunds. Tax, short paid. Tax, not paid. ITC, wrongly availed. ITC, wrongly utilized. ITC, wrongly paid. ITC, wrongly availed, or ITC, wrongly utilized. And the last case was regarding the erroneous refund. Erroneous refund. In short, 1, 2, 3, 4, 5. These are the 5 circumstances which have always come up in this provision, that ITC wrongly availed, ITC wrongly utilized, tax short paid, tax not paid, or erroneous refund. Now, if your intent is to evade the tax, then you would move to 74. If your intent is clear and bona fide, if your intent is bona fide, the case was dealt in 73, and rather if your intent was to evade the tax with an intention to evade the tax, then it would have gone to 74. Here there are certainly more elements need to understand. When we deal the case in 74, there are 3 more elements that you need to keep in mind. That is fraud, suppression, and willful misrepresentation. Fraud, suppression, and willful misrepresentation. So now you are amply clear that there are 5 elements onto which your intention is bona fide, then the same would have gone to 73. If your intention was to evade the tax, the same would have gone to 74. But there are 3 more elements, that is fraud, suppression, and willful misrepresentation. Moving further, there was a show cause limit, show cause notice time limit. 2 years, 9 months was the time limit to issue the show cause notice under section 73, whereas 4 years, 6 months was the time limit to issue the show cause notice under section 74. The time limit maximum to pass the order, the time limit maximum to pass the order was 3 years from the due date of the annual return, wherein in this case was 5 years from the due date of the annual return. Certainly, these time limits extended for from time to time for the initial financial years, and the same is already under the matter of litigation by many, which have said that this is unconstitutional to extend the date once and then again extending it. So the matter is still rested in the court. Moving further, there are certain slabs and time limits under which if you fall for the milestone, you would be certainly allowed the benefit. Let us say in section 73, if before the issue of show cause notice, you would have deposited the tax and interest, the penalty would have gone to 0. If you have deposited the tax and interest before the show cause notice, the penalty stands to 0. If within 30 days of the show cause notice, you have deposited the tax and the interest, the penalty in 73 again is 0. However, if this time limit has passed by, if both the time limits have passed by, that is, you have even crossed before the show cause and you have missed after show cause notice and 30 days have passed, your penalty now stands to 10% or 10,000, whichever is higher. 10% or 10,000, whichever is higher. Moving to section 74. Section 74. If before the issue of show cause notice, you have deposited the tax and interest, your penalty stands to 15%. 15%. Now let us say if show cause notice up to 30 days also, you deposit the tax and interest, your penalty stands to now 25%. This is 25% of the tax. If after passing of order, but within 30 days, you make the payment of tax and interest, your penalty now stands to 50%. 50%. If beyond that 30 days time limit has passed now, then in that case, your penalty stands to 100%. Then in that case, your penalty stands to 100%. Further, this section also missed one thing. That is the maximum time limit to adjudicate. Not I am saying the maximum capping period, but the show cause notice, if issued today, had no limit of closing the case or adjudicating it further. Rather, it had the maximum time limit in which the order had to be passed. Let us to section 74A. Now, and 70 to 60. The same will lead to 74A. Should again be remaining to 10% of the tax. However, please accept one fact here also. That the time limit to issue a notice is harmonious and synchronized for
Sorry to interrupt. Just wait for a minute.
Through issuance of a notice and demand and recovery proceedings has been a very huge amount for the various taxpayers. So in that regard, the amendment to section 16.4 has been a very welcoming move. So that is something, one of the most important of the very many amendments that we are now discussing as part of the Finance No.2 Act of 2024. And as CA Navya was also discussing about the fine differences between section 73 and section 74. So we were also waiting for him to discuss about section 74A, which has been the newborn baby, as our speaker rightly pointed out, that in the pre-GST regime as well, we had. Yes, Navya, you are now audible.
Yes, am I joined, sir?
Yes, Navya, you
Yes.
are audible now.
So you have to add me as the host to the technical team so I can start sharing the screen. Okay.
Thank you, Arvind sir, for continuing it. Sir has taken 16.4 a bit.
So section 74A talks about a harmonious show cause notice issue date. Anilji, I was audible till this section before.
Yes, sir.
Okay. So now it talks about 42 months wherein you can be issued show cause notice from the due date of annual return. months of the due date. Now, in both the cases, whether it is fraud, suppression, willful misrepresentation, or it is a case of bona fide intent, the notice now under RC01 can be issued up to 42 months from the due date of the annual return. This has made things more simpler, however, complex and I should say extended for the period for 73 cases. Further, this section now holds that if a show cause notice is issued, it has to be adjudicated within 1 year of the issue of the show cause notice. This can be further extended by 6 months with the permission of the commissioner, not below the rank of joint commissioner if a person is authorized by the commissioner. So now you would be amply acceptable, be satisfied, satiated that your case would be getting closed 1 year from the due date of this show cause notice issued now. Let us say the show cause notice is issued in August 24. This had to be cleared and adjudicated by maximum August 25. So this is now going to make things smoother and within time frame it will be getting closed. There is also certain other changes to this section. That 74A now holds a time limit of 60 days in each of the case where the milestone that I have discussed earlier. This 30 days now moves to 60 days. That now if within even 60 days of show cause notice, you deposit the tax or interest, your penalty shall be 0. Also has changed 60 days that in case of 74 where there is fraud, suppression, willful misrepresentation, if you have deposited the tax and interest, your penalty stands to 25%. If we order on 60 days, you have deposited the tax and interest, your penalty again stands to 50%. So now heading to the acceptability of this section. You would be appreciating that the things are now moving simply to one section. It also talks about the cases where the case refers to amount which is less than 1,000 rupees shall not be taken up. This is mentioned in this section 74A. I would be requesting when the members sections get notified. This will be a game changer section, but you have to maintain the pace of both the sections. Because 73, 74 still is for the tax determination up to 23, 24. So this will cause an undue effect of studying both the sections parallelly, implementing both, convincing the officer, and leading to some confusions and jeopardy for the assessees or taxpayers along with the professionals way along. Before we move and hand over to the co-speaker, I would again heading to the important segment of section 17. Anandji, will you allow me few more minutes to speak on this topic? Section 17. Section 17 is a section where we talk about the credits, where we talk about the credits ineligibility, where we also talk about the credits getting exempt or taxable and proportionately getting reversed. Here we have a section 17 subsection 5. Here we have a section clause 17 subsection 5. This is a blocked section. Blocked section, why I say, it talks about the credits which will never be allowed to you. It shall never be allowed to you despite you fulfill all the conditions. Despite you being fulfilled all the conditions, the ITC shall not be allowed under this case. You have to understand one more thing, that 17.5 has a list of items where the credit is disallowed and does not head to eligibility, and there are certain disclosures that you have to make into this clause in the 3B return which you file monthly. This clause had an item called I, 17.5I clause. This talks about the credit ineligibility for tax paid under section 74, 129 and 130. When you pay a tax under section 74, 129 and 130, your ITC gets disallowed. Your ITC gets disallowed. Now it is a beautiful relief, or I should say deletion, or I should say a grant of ITC that from financial year 24-25 onwards, financial year 24-25 onwards, your ITC shall not be strictly allowed. Reading of this section, because in this respect, any period up to financial year 23-24 for the case of 74 shall be substituted. Now the section has been substituted and it reads that 74 section up to 23-24 shall only be restricted, and beyond 24-25, if you pay any tax under section 74 also, the ITC shall be allowed. People might be thinking, or the members might be admiring the fact that how this is going to help me, how this is going to heed to the relief, how this is going to be beneficial to the assessee. Here you have to clearly understand that the cases such as reverse charge mechanism, where you had to take the ITC later on also. Let us take an instance. You deposit the reverse charge of 2018-19 today for the input tax credit. The situation is very clear that section 16.2 talks about conditions for waiving input tax credit. First condition is that you show a tax invoice. The second is that your supply is received. Third, that tax has been deposited. And fourth, your return has been filed. So, in this third condition, the tax should have been deposited. Please accept and add to the fact that tax deposited in case of reverse charge is today when you are depositing the tax. When you are depositing the tax of reverse charge today, the input tax takes the color of input tax today. This transaction converts to input tax credit today, and this not only merely gives you the benefit of input tax credit today, but also saves your working capital. By when you deposit the RCM in cash today, you're allowed the ITC. Only the loss is about the interest. The interest of delay in deposit. The interest of delay in deposit. So now, section 17.5I. When I talk earlier, used to restrict your ITC of reverse charge also if the same was paid under section 74. Say for instance, you are having a GST departmental audit going on, and the officer headed to the show cause notice of 74, where he would have said that you are not deposited the reverse charge mechanism, and why should I not raise the liability under 74? If you are aware of section 16.2 and you deposit the tax today in 3B, then also the ITC would have got restricted. However, from financial year 24-25 onwards, the reverse charge, even in case of fraud or like because the same has been taken into cognizance and the 17.5I has been amended necessarily to reduce an effect of 74 ITC getting restricted. This is the important changes that I had to discuss before I hand over to Arvindji, and he would be taking forward. Till then, we both are joined and would be adding to the amendments and would be taking it further for the question answers later. Arvind ji, is he joining 128A also, which Arvind ji would be taking in depth, but I should go around and check with you till then that what do you feel about the amendments? When about 128A, we promulgate and say this is the amnesty, but this is merely an amnesty which is leading to professional disheartening. Arvind ji, I started the way for 128A, which people commonly say it is amnesty, but it is disheartening to the profession. Why, when we talk about the reliefs and amnesty, members feel disheartened because they might have suggested their taxpayer to deposit the interest and penalty, and later on the trust of the professional gets shattered when they have deposited the interest and penalty by the way of conservatism or a prudent thought, but might have led to certain other extents. Now I head to you, sir, for the further taking up of the sessions. Till then, I'm joined with you and will be taking up the queries in the last together.
Yes, Navya. So thank you so much. So a very good evening to one and all. At the outset, I thank the chairman of the Indirect Taxes Committee and the vice chairman and the various office bearers for giving us this opportunity to share with our members about the important amendments, and the most importantly, though not yet notified, it is in the interest of the profession that we stay abreast, that we know about what are the various changes that have been made through the Finance Act uh, Finance Number 2 Act of 2024. So at this time, very good evening to all once again, and let us just get started over here. So we heard CA Navya also explaining to us that yes, of course, the amendments in GST are not a yearly exercise. Unlike in the case of income tax, where the budget actually brings out the income tax changes, but every time there has been a GST council meeting, there has been a change. And all these changes have been in the interest of the trade, the industry, and the professional community at large. So, where we, as our vice president rightly mentioned, that is, we actually have taken GST forward since 2017 in the interest of the country at large. So, number of GST council meetings that has happened so far. So you know that the latest GST Council meeting was the 53rd GST Council, and as a result of which we have these various amendments which we are discussing today. So each year we had different number of amendments, and here we could see, right, in 2016 we had, before the enactment of the GST law, we had around 7 GST Council meetings. In 17 we had as many as 17 GST Council meetings, and each GST Council meeting came up with a lot of amendments. So we had n number of notifications, circulars, clarifications, rate modifications, all coming up in 17, 18, all as a result of these various GST Council meetings. So then over a period of time, the law has, I understand, reasonably got settled, and that is what the government believes. Therefore, the number of GST Council meetings has got now reduced. And as you could see, in 2023, we had around 4 GST Council meetings, and this year we have had 1 GST Council meeting so far, and that has paved the way for the amendments through the Finance Number 2 Act of 2024. So, talking about the Finance Number 2 Act of 2024, how many amendments have been made in this budget, in this Finance Act? So, just to reiterate, just to reflect back upon how many amendments have been made in each of the earlier Finance Acts, right? So, right, in 2019 Finance Act, we had only one section that was amended in the provisions of the CGST Act. In 2019, that was an election year, we had two finance bills or the two finance acts. In the interim budget, no section was amended. In the full budget of 2019, we had 22 sections that were amended. In 2020, we had 16 sections being amended. 2021, 15, 19, 23. 2024, we had an interim budget. And now we have the full budget or the Finance No.2 Act of 2024. So how many sections have got amended? If you really look at the number goes to say there have been 37 sections that have been amended through this Finance No.2 Act of 2024. So decoding this 37 sections is what has been the responsibility given to us by the IDTC, and it's extremely privileged to address you all on these 37 amendments. So with respect to this, the most important sections have been with respect to the amendment to section 16 subsection 4, the newly introduced, the newborn baby, as CA Navya rightly pointed out, the introduction of new section 74A have been beautifully covered by CA Navya. The amendment to section 74A, as he has explained, has 18 other amendments also. So section 74A, to bring that section into effect, 18 related sections also needed to be amended, and all those things have been part of CA Navya's discussion. Then we have 7 sections which are giving relaxations. Section 9, Section 11A, 16.4 beautifully covered. So 107 relating to appeals, the appeal provisions. 128A is what Navya has given me the way forward towards. 128A, 140, right? Then we have 9 sections with some other amendments, and 1 section which is a provision as part of the Finance Act 2024, Section 150 of the Finance Act, but it does not make any amendment to the CGST Act. It is part of the chapter comprising the entire provisions of CGST, but this section 150 is relevant to section 16.4 of the CGST Act, but it is a standalone provision. It does not insert or modify any of the existing provisions in the CGST Act. So how much does this total bring up to? 74A plus 18 is going to be 19 sections, 7 sections giving some relaxations, so making it 26, plus 9 sections of other amendments, making it 35. 1 section which is not making an amendment to the CGST Act, but falling part of the CGST chapter in my Finance No.2 Act. What is the balance remaining 1 section? As our Vice President rightly pointed out, we are here to give and also to earn. So that 1 section is an opportunity, and that is the section that I would like to take up as the first part of my discussion today, right? So to begin with, the representation before departmental authority in respect of summons. We have a specific provision in the CGST law, an existing provision, section 70. This gives power to the departmental authority to summon, that is to call any person to provide or produce any document, evidences, or any other thing during the course of an inquiry. And the procedure for summon shall be in the manner as provided for the case of a civil court under the provisions of the Code of Civil Procedure, right? So this is what section 70 subsection 1 of the CGST Act goes to say. So very simple, a person can be called for to provide evidences or any documents. Very simple, and it goes to say that it is going to be as if providing in a civil court. And when I say giving in a civil court, very simple to say, right? सत्य कहूंगा, सत्य के सिवा कुछ नवीन नहीं कहूंगा. That is, in Tamil, if I have to say, நான் சொல்வதெல்லாம் உண்மை, உண்மையை தவிர வேறு எதுவும் இல்லை. So whatever I say is the truth, and whatever I say will not be false. So that's the statement that we give at the court, and a representation made at the time of summon is like submission of evidence before the court, and therefore it has to be completely true. So in this regard, there has been a modification, a new opportunity for the chartered accountants in terms of insertion of section 70 subsection 1A to the CGST Act. What is this insertion of the 70 subsection 1A? All persons summoned under subsection 1 shall be bound to attend. Yes, they shall be bound to attend either in person or by an authorized representative, right? So now this new section provides to say that in response to an summon issued by a departmental authority, the person can himself attend or through an authorized representative. Now the question comes, who is an authorized representative and why do I say this as a professional opportunity? Some authorized representative not defined in the section 2 of the CGST Act, but we have a very specific definition in section 116 subsection 2 of the CGST Act. A question would come whether this provision in section 116 will it apply to section 70? Section 116 starts with wordings to say purposes of this act. So when they use the word for the purposes of this act, it is very clear that it will apply for the provisions contained in section 70 also. For the purposes of this act, the expression authorized representative shall mean, and clause C very specifically goes to say a chartered accountant, any chartered accountant who holds a certificate of practice and who has not been debarred from practice. So this is a very specific provision which says that a chartered accountant having a valid certificate of practice is an authorized representative, and reading section 116 subsection 2 along with the provisions introduced in 70 subsection 1A, it is very clear that we chartered accountants have a newfound professional opportunity of making a representation before the upper departmental authority in respect of a summon as well. Because representing before the departmental authority in response to a notice, in response to an appeal is different, and in response to a summon is going to be different. So let's decode what this section 70 subsection 1A is talking all about. There is an obligation to attend. 70 subsection 1A very clearly goes to say all persons summoned under this provision are required to attend, and the mode of appearance is where they go to say the attendance can be in person or through an authorized representative. And this is subject to the officer's discretion. The summon has to very clearly provide that the person who's being summoned can appear or he can appear through an authorized representative. Therefore, there is a requirement that the notice issuing, that is the notice issued by the departmental authority summoning a person, has to contain the wording that it shall be through an authorized representative. Not always permissible, because the law very specifically says the mode of appearance is subject to the direction of the summoning officer, right? So if the notice does not contain the authorized that it can be appeared through an authorized representative also, then we can make a request. The person who has been summoned can make a request requesting that he may be allowed to represent through an authorized representative. What is responsibility for us as chartered accountants in practice during such appearance? The person appearing must truthfully answer questions, provide statements, and produce any required documents or items. So we need to do some homework, study the case in full, not just the details that have been sought for in the summon notice, but also the details that could be asked during the course of the summon proceedings. So generally, in the case of CGST, in our practical experience, I can say, in the course of recording a summon statement, they would ask us a question, they will record our answer as a statement, and it will be made into a beautiful statement, right? So we need to know the entire in and out of the taxpayer, the issue, the various facts that has happened before this notice, and then only we would be able to represent the case in the best possible manner. At this juncture, I would also like to bring to the attention of our members about a very important circular and instruction which has been issued by the Central Board of Excise and Customs erstwhile. Now it is in the Central Board of Indirect Taxes and Customs, right, in 2015. This circular and instruction still now holds good, and that is also one of the fundamental reasons I believe has been the reason for the introduction of this section 70 subsection 1A. While the evidentiary value of securing documentary and oral evidence under the said legal provision can hardly be overemphasized, it is desirable that summons need not always be issued, when a simple letter, politely worded, can also serve the purpose of securing documents relevant to investigation. Why is this paragraph relevant? This paragraph emphasizes and gives us clarity to understand that a simple notice or a simple letter seeking details is different from a summons statement. A notice seeking documents is different, and a summon is something which the department should exercise with utmost caution and only when utmost required. So when the department is required to exercise utmost caution for the issuance of summon, it gives us also that onerous responsibility that we go utmost prepared to face a summon before the departmental authority. Further, senior management officials such as CEO, CFO, general managers of a large company or a PSU should not generally be issued summons at the first instance. They should be summoned only when there are indications in the investigation of their involvement in the decision-making process which led to the loss of revenue. So these are wordings which are being extracted directly from the CBEC instructions, and these are very relevant. Previously, so whenever summons have been issued, there has always been fear created from the top management. Why is the departmental authority asking the CEO or the MD to personally appear? And there have been various trials before the courts filing of writ petitions challenging the issue of summons. But I can tell you that the validity of the summon has been upheld in multiple judgments, a couple of judgments to just bring before you. Shawar Khan and another by the Allahabad High Court and also Kunj Power Project, they have very clearly established that issuance of a summon, when the law provides that there is a mechanism for issuance of summon, yes, of course, the department authority has the power to issue summons. It is the duty of the taxpayer to participate in such summon proceedings, right? At this juncture, because it is a very professional opportunity, I thought we should also discuss about the existing provision in section 70 subsection 2, which reads to say every such inquiry referred to in section 70 subsection 1 shall be deemed to be a judicial proceedings within the meaning of section 193 and section 228 of the Indian Penal Code. So what are these two sections of the Indian Penal Code which we need to know when we are representing the authority in the course of summon proceedings? Number one, 193 of the Indian Penal Code deals with giving false evidences. If the evidence provided or the statement provided is found to be false, then there can be punishment, including prosecution as well as fine. Section 228 talks about restricting the officer or insulting the officer or any interruption to the officer during the course of the judicial proceeding, which here is the summon. So during the course of the summon, if the officer feels insulted or he feels there has been an interruption to his authority, then he could invoke the provisions of section 228 of the Indian Penal Code, wherein there could be an penalty in that regard as well, under the provisions of the Indian Penal Code, right? So this is the first and the foremost provision that I wanted to bring to our members, which is the new professional opportunity. Once it is notified, we would be able to represent the taxpayers before the departmental authorities in respect of summons. Now going to the foundation which has been given by our speaker. So CA Navya has given whether this is an amnesty scheme or how is the benefit of the new section 128A. So this Samadhan scheme, which is a scheme providing a waiver of interest and penalty, the section title, the marginal note reads as follows: waiver of interest or penalty or both relating to demands raised under section 73 for certain tax periods. So the section is very clear that it provides the heading, and as well we will read through the entire provisions also. It is providing a relief from interest or penalty. Is there a relief for late fee? No. The section apparently does not provide any relief towards late fee. Now going to the section, breaking it down, the period covered under this Samadhan scheme under the provisions of section 128A is the period from 1st July 2017 to 31st of March 2020. 17-18, 18-19, 19-20. Right? So this is the period that is covered under the Samadhan scheme, and our co-speaker Navya has really brought out the period which is covered under the provisions of section 16 subsection 4. The relaxation for the provisions in section 16 subsection 4 period needs or should not be confused with the period for which the benefit is provided for under section 128A. 1718, 1819, 1920. Only 3 years are covered under the Samadhan. And what is the situation where any amount of tax is payable by a person chargeable with tax? So when there is an amount of tax which is payable, then this situation, this benefit could be taken. The condition is that the person pays the full amount of tax payable. So whatever is the tax that is payable in this situation, the full amount of tax is paid, and that is to be paid before the deadline, on or before the date, as may be notified by the government. But in the press release of the GST Council meeting, we came to know that the deadline is going to be 31st of March 2025. The benefit ultimately is going to be no interest under the provisions of Section 50 and penalty under this Act. It does not talk about which penalty. It generally talks about any penalty under this Act. And all the proceedings in respect of the said notice or order or statement shall be deemed to be concluded. So this is also the amnesty, or this is the scheme that is contained in Section 128A. For 3 financial periods, when there is a tax payable, condition that he makes the payment of tax within the time as notified, that is before 31st of March 2025, he shall be given the relief from interest and penalty. Now, when we are talking about the relief from payment of tax and penalty, we need to really know in which very specific situation would I be able to enjoy this benefit, right? So to understand the very specific benefit when I can enjoy the benefit of this section 128A, now we talk about the entire scheme of the various processes under GST. One, it could be pre-SCN proceedings or related proceedings, which we call it as DRC 01A and DRC 01. Then there is the order related aspect of things. There are some special proceedings, pre-SCN proceedings, SCN proceedings, then there is the order related aspect of things. You also from the order, it does not attain finality. You have the first appeal before the department as per section 107. You have the second appeal as per section 112, the GST tribunal, which is in the final stage of getting constituted in each of the states. And then we have the High Court of Supreme Court. So the general condition is that there should be a tax amount payable. But in whether in all these situations, that is when I am there in the pre-SCN proceedings, whether I am in the SCN proceedings, whether I'm at the first appeal, whether I'm at the second appeal, in all these situations, can I get the benefit of section 128A? Let's look into it with very practical situation, right? First of the situation, it's a scrutiny notice. Every one of us would have seen this notice for sure. It's a notice in form ASMT 10. And a scrutiny notice in form ASMT 10, and whether would you be able to enjoy the benefit of section 128A? No, definitely not. Section 128A talks only about a notice under section 73. So a notice which is issued only in ASMT 10 will not be eligible for the benefit of this section 128A. There has been a departmental audit and an audit para has been issued. Whether the provisions of section 128A will be eligible? No. Audit description communicated, that is the audit report itself is issued. Whether would you be eligible to take the benefit of section 128A? No. There is voluntary payment that you come to make, say for example, for the financial year 1920, having attended all the various sessions of IDTC, you come to understand that there is an amount of tax that you are obligated to pay. You advise the taxpayer to make the payment voluntarily. Would such situation be entitled to the relief from interest and penalty? No. A notice has been issued in section 73, but no reply has been given. Will I be eligible to the benefit of section 128A? Yes. A notice has been issued in section 73. I have given the reply. Order has not yet been passed. Maybe it is in the course of personal hearings. Whether can I take the benefit of section 128A? Yes, we would be entitled to take the benefit of section 128A. Notice issued in section 73. reply given, order is also passed by the adjudicating authority, but appeal has not yet been filed. But the time limit to file an appeal is still available. Can I enjoy the benefit of section 128A? Yes, I would be entitled to the benefit of this section 128A. Notice issued under section 73, reply given, order passed, appeal not filed. The time limit has lapsed. Can I take the benefit of 128A? Yes, again. Under section 73, notice, reply given, order passed, appeal filed. Yes, I can still avail the benefit of 128A. All the last situations that I was talking about that is eligible for the benefit of section 128A, all talking about notice under section 73. Now is a situation where it is any order passed by the first appellate authority or by the revisional authority. So any order, be it an order under section 73 or an order under section 74, which is passed by the first appellate authority, is eligible for the benefit of section 128A. A notice which has been issued under section 74, or even the case where an order has been issued under section 74, but pursuance of the further order of the first appellate authority or the tribunal or the court under the provisions of section 75 subsection 2, which goes on to say that this case need not be under section 74. It is only a case under section 73. 75 subsection 2 has the power wherein the appellate authority or the court can direct that order or the notice to say that it shall be only under the provisions of section 73 and not under section 74. Even in such a situation where we have a notice or an order, though it was initiated under section 74, when the appellate authority or the court has directed that it shall be under section 73, then even in that situation, we would be entitled to the benefit of section 128A. So though I have quoted very clearly on each of these situations when I can take the benefit of section 128A, it is also equally important to understand that the benefit of section 128A can be taken only and only after the date that it is notified. Even the title of the session has been very beautifully kept by the Indirect Taxes Committee that it is not yet notified. Though the finance bill has been passed by the Lok Sabha, passed by the Rajya Sabha, received the assent of the President, put up in the Gazette, and is now officially the Finance No. 2 Act of 2024, the amendment to the GST, various amendments to the CGST Act will come into effect only from a date in which it is notified, and it is expected to take some time for the reason that the amendments to the CGST Act can be notified only after the similar amendments has been made in the amendments to the SGST Act also. So the amendments to the SGST Act, once done, we will be able to see the notification coming and the section getting notified. Until then, you can quote the principle or the doctrine of promissory estoppel. That is, though the section has not yet been notified, based on the recommendations of the GST Council and the Finance Bill becoming the Finance Act and bringing section 128A actually into effect, based on the doctrine of promissory estoppel, we can state before the various authorities to keep the case in abeyance and not to move the case any further. But one important aspect that I would like to touch over here is with respect to an order which has been passed and for which an appeal is yet to be filed. There could be a question that I am entitled to the benefit of section 128A. Why should I be filing an appeal at all? But it is very clear that unless and otherwise it is notified, since we do not have the benefit of the section 128A today, we will have to file an appeal so that the demand is put under stay. The demand of tax has to be put under stay. So for filing an appeal, how much is the pre-deposit is something which we would be discussing immediately in the forthcoming slides. And therefore, if the appeal is not filed, there may be chances of attachment and recovery proceedings being initiated also. Therefore, it is important that you file an appeal if there is an order, even though there is the benefit of section 128A to be received by you. Other aspect of 128A, if the interest and penalty is already paid, Yes, of course, that is what exactly CA Navya has been pointing out to say. It has put the professional community in a very trickier situation to say that if we had advised the client to say to pay the payment of interest and penalty, because interest is something which is mandatory and penalty 10% even would have been paid. So now, if that was already paid, there is no refund under the provisions of Section 128A. If the notice has been issued with respect to erroneous refund, then we are not eligible for the benefit of Section 128A. If the case is pending before the first appellate authority or before the any appellate authority or the court, then the case has to be withdrawn for claiming the benefit of Section 128A. No appeal can be filed in respect of the orders once you have taken the benefit of the scheme. You cannot really operate on both ends. Once you have taken the benefit of Section 128A, then you cannot file an appeal against the same case as well. In respect of cases involving a departmental appeal, and as a result of the departmental appeal, say for example, you have got an order in original which is in your favor, but the department has gone in for an appeal. And as a result of the appeal, you are obligated to make a payment. And in which situation can I enjoy the benefit of this Section 128A? Yes, you can enjoy the provisions of 128A subject to the condition that whatever amount of tax that is coming as a result of the departmental appeal, that additional tax has to be paid within a period of 3 months from the date of the said order. So once the amount is paid within a period of 3 months from the date of the order, then you will be entitled to the benefit of Section 128A. Next, we have another new section, which is also a very beneficial provision, insertion of Section 11A to the CGST Act. There are very many situations wherein we say, this is the common practice that is being followed in the trade. In very many situations, say for example, to just illustrate a situation where there could be a very tricky situation where employee recovery towards canteen. There are very generic practice that employee recovery from canteen is not subjected to GST. In very such situations, or it could also be a situation where this issue is also being taken up today in the construction field. Say, for example, the supply of land towards a joint development agreement for construction by a builder, whether GST is applicable or not. In the pre-GST regime, that is before 1/4/2019, up to 31/3/2019, whether the supply of land by the landowner to the builder under a joint development agreement is subjected to GST was a question. Now the department is starting to issue notices, and there is a common trade practice that the landowners were not actually paying GST, but the builders were discharging GST on the entire construction value. So these are some prevailing practices where many, that is industry together, has not followed what has been the intent of law, which is now getting unraveled today. So that is what is being covered here, to say a common approach or a practice which is being or which was being widely followed regarding the applicability or non-applicability of GST on any specific supply. And therefore, the supply which is actually liable to GST, but GST was not at all being paid by the industry in general. Department now comes up to say, yes, it is liable for GST, but generally no one in the industry was paying GST because of prevailing practices. Or the supply was actually subjected to a higher rate of GST as per the department's interpretation, but it was generally, as per the industry's interpretation, was levied at a lower rate. In these situations, now the government may notify that the difference of tax, or even if it was nil, as compared to the common practice, shall not be required to be paid. This is a very beneficial provision, and we need to see what are the situations that are going to be notified under the provisions of Section 11A. But now this is going to be a very important thing, and for us from the professional community to collectively represent the various prevailing practices which needs to be notified under the provisions of Section 11A, which could largely benefit the tax-paying community at large. Right. So this is something which the professional community, we at ICAI, will take it up further. And I'm very sure that the IDTC is working actively on this subject as well. Next, provision, but a very impactful one, is with respect to the amendment to Section 9. Section 9 of the CGST Act is the charging section, which talks about, subject to the provisions of subsection 2, there shall be levied a tax hereinafter called as the CGST tax on all intrastate supplies. And the charging section specifically excludes one important aspect, that is alcoholic liquor for human consumption. See, we are all well aware that GST has been a very comprehensive law, and Section 9 charges tax on all the goods. And Section 9 subsection 1 has only, or to say, had only one exception, that was alcoholic liquor for human consumption. Now we have a new addition which is going to benefit substantially to say for example, the sugar industry. Say sugar industry, they were manufacturing molasses, and as a result from the molasses, they were also manufacturing denatured, undenatured, extra neutral alcohol, or to commonly say it as ENA, or rectified spirit, which was the raw material for alcoholic liquor for human consumption. There was an ambiguity whether it was subject, whether it is liable for GST, and there was diversified opinion across the states. Multiple GST council meetings had discussed on this subject, but finally now the 53rd GST council meeting has come up very beautifully to say that in the charging section itself, in Section 9 subsection 1 itself, we will exclude ENA and rectified spirit, which is used for the alcoholic liquor for human consumption, from the purview of GST. Right? So what is not charged with GST? These two things, this is not charged. We have something under Section 9 subsection 2. 9 subsection 2, we have motor spirit, we have crude oil, we have the crude petrol, you have diesel, turbine fuel. So these are under Section 9 subsection 2, and that is also outside the purview of GST. We have the list of entries in Schedule 3, which are not subjected to GST. Then we have the exemption notifications, which are for exemption of supply of goods. We have a separate exemption for supply of services. But here, this is something which is excluded completely from the purview of GST itself, because this is excluded from the charging section itself. This is a provision which is relating to the time of supply of services, particularly with respect to reverse charge mechanism. So our co-speaker, C.A. Navya, was also beautifully explaining about the amendment in Section 17, subsection 5. And here we have an amendment in two important provisions which interplay together with respect to the time of supply of services. When is the time, or what are the situations when the recipient of service is required to issue an invoice under reverse charge mechanism? So in a situation where the supplier is not a registered person, that is what Section 31(3)(f) talks about. So before I touch Section 13(3), I am reading the provisions of Section 31(3)(f), where as well there is a very important amendment, and that interplays with Section 13(3). So 31(3)(f) goes to say a registered person who is liable to pay tax under Section 9 subsection 3 or 9 subsection 4, that is reverse charge charging provisions, within the period as may be prescribed, issue an invoice. So a person who is paying tax under reverse charge mechanism shall issue an invoice. Generally, an invoice is something which is issued by the supplier of goods or the supplier of services. But when it comes to reverse charge mechanism, we have the situation where the recipient of service is going to issue an invoice when it is received by him from a supplier who is not registered on the date of receipt of goods or services. So when I am receiving a service which is liable to payment of tax under reverse charge mechanism, that is under Section 9 subsection 3 or 9 subsection 4, and the supplier of service is unregistered, then I shall be required to raise an invoice. And in which situation the time of supply shall be the earlier of the date of payment to the supplier, or the supplier invoice plus 60 days, or the date of invoice, the date of issue of invoice by the recipient, that is by the person paying the reverse charge mechanism. That is in situation where I am required to issue the invoice under reverse charge mechanism. That is why I have brought in the provisions of Section 31(3)(f). So two corresponding amendments, Section 31(3)(f) and Section 13. Section 30 of the CGST Act, that is with respect to revocation of cancellation of registration. wherein now they have very specifically said that it can be subject to conditions or restrictions as may be prescribed. Previously, whenever there has been a cancellation of a registration and I apply for a revocation, the departmental authority had the power to reject the application or approve the application for revocation. But now they can grant the revocation subject to conditions and restrictions as may be prescribed. And whenever the act uses the word as may be prescribed, we have to wait for the rules. And the rules are still awaited in this regard. Now talking about section 39, subsection 3, GST TDS return, we had the old provision wherein the e-commerce, the person who's deducting TDS, that is the person who's deducting TDS generally, say for example, the governmental agencies, the PSUs, they are liable to deduct TDS. And in respect of such companies who are deducting TDS, the interpretation of the old section 39(3) went on to say they are liable to file such return only in the month where such transactions are actually done. That is, if there are no transactions in such specific month, they were not required to file such TDS return at all, the GST TDS return. So that is what, for the month in which such deductions have been made, right? Only when such transactions are there, they were required to file that TDS return. But now it is getting amended to say that such kind of persons shall furnish a return for every calendar month of the deductions made during the month, amply clarified through the proviso, the newly inserted proviso to section 39(3), provided that the said registered person shall furnish a return for every calendar month, whether or not there are any deductions have been made during the said month. Therefore, even in a month wherein you do not have any deductions, you are now mandated to file the GST TDS return. And that is what is the resulting understanding of this amendment to section 39 subsection 3, which has been substituted through this Finance No. 2 Act of 2024. Next is about the refunds under GST. Section 54 subsection 3 had 3 provisos, and that was the enabling provision. Section 54(3) was the enabling provision for refund of inverted tax structure with respect to zero rated supplies. And we had 3 specific restrictions or provisos. The second proviso provided to say that if the export was subjected to export duty, then I shall not be eligible to the refund of unutilized input tax credit. The refund of unutilized input tax credit to mean refund under Rule 89 is not eligible if the goods are subjected to export duty. But as our members are already very clear, refund with respect to zero rated supplies, or to say refund with respect to exports, are eligible under the provisions of Rule 89 or under the provisions of Rule 96, which is an IGST paid export. This proviso, which existed as the second proviso to section 54 subsection 3, could not restrict the IGST paid refund being claimed for goods which are subjected to export duty. Now, therefore, this proviso has been removed and a new subsection 15 to section 54 has been introduced, which is an overriding provision to the entire provisions contained in this section. No refund of unutilized input tax credit on account of zero rated supply of goods or of IGST paid on account of zero rated supply of goods shall be allowed where such zero rated supply of goods is subjected to export duty. Therefore, if your exported goods are subjected to export duty, then you shall not claim any refund, whether it is under Rule 89 or whether it is under Rule 96 of the GST rules as such. Next is the provisions relating to the appeal to the first appellate authority. There have been two amendments to section 107. One is with respect to the introduction of section 74A, and this amendment is a different amendment with respect to pre-deposit. As we are all well aware that appeal to the first appellate authority under section 107 requires payment of pre-deposit under subsection 6, which goes on to clearly say that we need to make the payment of admitted tax, interest, penalty, fine and penalty. if you admit any tax, interest, fine, penalty, fee, everything needs to be paid. And if it is disputed, you need to make the payment of 10% of the tax amount only. Now, the maximum amount previously was 25 crores. Now it has been changed to 20 crores. This has been the change with respect to the first appellate authority. Going to the second appellate authority, which is the appellate tribunal, there have been two amendments. One is with respect to the time limit for the filing of appeal. The second is with respect to the pre-deposit also. The first amendment with respect to the time limit for filing of appeal, section 112, subsection 1, goes on to say that the appeal has to be filed within 3 months. Now, what is the 3 months? What is the starting period of the 3 months is something which has to be very carefully noted, because there have been various orders passed in 21, 22, 23, 24, and even in the earlier beginning of 23, 24, we have innumerous orders passed by the first appellate authority. But due to the non-constitution of the GST appellate tribunal, we were constrained to file the appeal before the GST appellate tribunal. Therefore, now, as a facilitating mechanism for all such appeals which have been passed by the first appellate authority and pending for appeal before the second appellate authority, that is the GST appellate tribunal, the time limit has been given to say within 3 months from the date as may be notified by the government on the recommendations of the council for filing appeal before the appellate tribunal under this act, or whatever is the date of order, whichever is later. So the time limit of 3 months will start from the date which is to be notified, right? So from that date, within 3 months, you need to file the appeal. And if it is going to be recent order, after the date is being notified, then you will have further period of 3 months within which you need to file the appeal. Next is with respect to pre-deposit. Pre-deposit has been a very welcoming amendment. Previously, the pre-deposit is always the admitted amount plus of the disputed amount we had to pay 20%. Now, the pre-deposit disputed amount needs to be 10%. 10% of the first appellate authority and additional amount of 10% to be paid before the GST appellate tribunal, or a maximum of 20 crores. Previously, the maximum amount was 50 crores. So now this is also a welcome amendment. These are some of the important amendments which we wanted to discuss for the benefit of our members at large. I thank the chairman of the IDTC committee, the vice chairman of the indirect taxes committee, the various office bearers, and the facilitating team who has made this beautiful webinar happen. Now we will take it forward with our question and answer session. I'm sure that our members have innumerous questions, and we are here. Myself and CA Navya, we both are here to clarify your questions. I thank each one of you for patient listening as well. Thank you for the members.
You can take up the questions from the link.
Yes. Okay. So let me take. So we have a question. So Navya, you're on. Can we take up the questions? Can I get started with the questions?
I am also logging in to that, sir.
Okay, so let's start reading the questions, and for the benefit of our members. So we have CA Subhashis Banerjee from Thane, section 114 of the Finance Act, from the date enactment, right? All provisions, section 114 of the Finance Act, to very specifically take section 114 is talking about the amendment of section 9, right? Amendment of section 9 will also come into effect from the date on which it is. That will also come into date from a date it will be notified. So we will expect the notification in some time, and only after which we will be able to get the benefit of the amendment to Section 9 of the CGST Act, exempting the ENA and rectified spirit which is manufactured for human consumption, alcoholic liquor for human consumption. Right. Next, so we have a question from CA Pramod Kumar Jain. How the demand raised under Section 16, subsection 4 can be reduced? No appeal filed. Navya?
Yes. I read the same question. It is from Jaipur. I think Pramoji, in that case, when Section 16 for inside get notified, you would be taking it through the relief of that notification. However, if till then the notification doesn't come up or it is not yet notified, the Section 16.4 relief of Section 16.5, you can take it by merely a submission of a letter and saying that your appeal is not filed. However, the amendment is proposed, and then in that case, your relief should be granted.
Right. So, CA Aravind from Bangalore, Section 128A. When we can avail the benefit of the amnesty scheme or the Samadhan scheme, the likely date of opening, strategy till it is open, right? So coming to a very practical thing. So the likely date is not something which we can really predict at this time, but we need to wait for the SGST Act to be also amended, and only then we can expect the date to be notified, which I don't really see to be happening very immediately. But in the meantime, the strategy to be adopted is that keep the proceedings live, let there not be any recovery proceedings, because there has to be an amount which is payable. If the entire amount of tax, interest, and penalty has been recovered, then you would not be eligible to claim the benefit of Section 128A. Therefore, in that regard, keep the proceedings live, give replies, ask for time to the departmental authorities. If an order is passed, file an appeal within the statutory time limit of 3 months, so that the case proceedings are still live and you would be entitled or eligible to claim the benefit of Section 128A. Why GST is becoming more complex? Why
Next
it is not?
This next question is, Arvindji, difficult to answer, though it sounds very simple. And it is saying why GST is getting complex and why not getting simpler. Arvindji, I would like to comment on this, and I would like to clarify all that we are working on a 5-point mechanism in GST. One is the act, one is the portal, one is the assessee, one is the professional, and one is the officer. And to be very frank, what is written in the act is not happening on the portal. What is happening on the portal is not acceptable to the assessee. What is assessee saying is not acceptable to the professional. What is happening and said by the professional is not acceptable by the officer. And what the officer says is not in the law. So it is a vicious cycle we are already revolving around, and it is the cycle that we have to survive for certain more period of time. And I am certain that it will be getting simpler very late in, I should say, more than 5 years now. But yes, I'm very frank onto this. When excise law was implemented in India, it took 70 years, even oddly, to describe what is manufacturing, and the Supreme Court had to intervene despite 70 years of implementation, that what is a manufacturing activity. So GST is going to get more litigative, more apprehending towards complexities. What is your point, Arvindji, on that?
Yes, sir. So GST, as Navya sir has brought out, it's under various things are operating together to make GST law actually run. And in this regard, I am definitely sure that our members play a very key role in every aspect of things to really facilitate the taxpayers towards tax complaints. So in that regard, definitely, if GST has been a success towards the entire period of 7 years, definitely it is credit to the members. But as you had said, there are some complexities. But in the way of giving relaxations, definitely things are little getting complicated as well. but relaxations are something which are coming for the benefit of the trade industry and the various stakeholders at large. See, definitely so many notices are coming to an end, and which is a blessing in disguise. So definitely things are in the right direction, but of course there needs an effort and from our side towards all this deciphering these intricate and complex provisions. Right, sir. So we have CA Badresh Bavsar from Gurgaon. As per the proposed amendment in section 31(3)(f), a registered person shall issue tax invoice in the case of supply received from unregistered person within the time limit as may be prescribed. Time limit prescribed in Rule 47, and accordingly tax invoice to be issued within 30 days of the date of supply. However, in a practical scenario, and mainly in the case of imported services, it is hard to identify the exact date of completion of services. So can self-invoice be issued within 30 days from the date on which invoice is booked in the books of account? Yes, definitely. So from the date on which invoice is booked in the books of account, 30 days should be a reasonable time limit, should be the right time limit. And if the reverse charge invoice is generated and tax is discharged, then you should be released, definitely. Right. So then we have CA Madan Barve from Mumbai with respect to GST on transfer of leasehold rights. The matter is pending before the Supreme Court, and can you throw light on some recent updates on this matter, as the demands are substantial? So this is one of the matter that I was also discussing in light of the newly introduced provision section 11A. Some prevalent practices, and because of which the government may come up to notify these kind of issues. And for us from the professional community, we will represent to the government to notify these kind of transactions to be under the concept of prevalent practices, and therefore should not be subjected to GST. Navya, any?
I think this is going to go to the GST Council, and it has been in awareness of all that these are certain issues that have come up. It requires clarity, and circulars should be out on that. When this matter, however, in my humble opinion, it says transfer of rights pending before the Supreme Court. The matter, if even comes about Supreme Court, the act can also be predicted and can change. So I preferably say we should wait for the appropriate clarification soon after the Supreme Court judgment, or even before the contemplating judgment in favor. Then the act or circular can be accordingly circulated or issued by the department. So the next question,
Right.
next question, it says, it is not a technical nature query, and it is asked by Deepak Agarwal. He's saying it is based on a practical situation might be facing by any professionals like us. In case many clients we suggested to make the payment against the notice under section 16(4) and get it closed. Many clients do the same. Now after this amendment, which is yet to be noted, our earlier stand got changed. My query is whether there may be any mechanism to deal like such cases, particularly which have been deposited in last 1 year. Very, very beautifully asked, but to be very frank, it is harsh to answer this. When these release or amnesty come up, I spoke in my deliberation also that these kind of reliefs or amnesties are detrimental to the professional trust. The faith that assessee poses on you are under threat. Once now, you will be asking your assessee, your client, to submit the interest and penalty just to avoid disputes or litigation. The assessee will simply put a remark there that should we wait for the amnesty or should we wait for the relief? It will make you feel that you are challenging your own decision. Like cases which have been deposited in last 1 year, the Finance Act proposed is very clear that by virtue of any interest or penalty that you have deposited in any of the provisions, you will not be allowed as a refund. So simply that is the loss that you have incurred, and now that loss has to be bared and cannot be refunded. I think it is well nested
Right.
now. Yes.
Right. So next is a question by CA Harsh Bhavin from Rajkot. If the tax is paid before the issuance of SCN, like during GSTR 9 or tax is paid within 30 days of the issuance of SCN, can penalty be levied under 7311? Officers are levying penalty stating tax was paid after 30 days of the due date of payment of tax. Now we have the benefit of section 128A. No worries to say really go to the provisions of section 73, whether it was paid before the issuance of show cause notice or within 30 days of the show cause notice. Now section 128A is going to set right all these things. So, and even otherwise, in your situation, I would say you are entitled to the benefit because the payment has been made before the issuance of show cause notice. There shall not be any applicability of penalty in your case. So that's the very straight answer to you, CA Harsh Bhavin. But yes, else yes as well, you have the provisions of section 128A. So with respect to Samadhan scheme, we have a question from CA Sadhana Shah from Mumbai. If the appeal is submitted related to interest demand, then also benefits of Samadhan scheme can be taken. Yes, definitely. With respect to interest, you can file an appeal and you can take the benefit of the Samadhan scheme. Whether application under section 128A is to be filed first or the appeal is to be withdrawn first, we will wait for the official notification on this regard, CA Nitin Furia from Mumbai. So we will wait for the rules and the enablement of the portal in this regard, and then we will step forward on that very practical aspect.
But in my humble opinion, the appeal should have been withdrawn first, then you must go. But that is yet to be coming, as Arvind has also said.
Right. So again, a question from Sadhana Shah from Mumbai. If no notice under section 73 for interest is issued by the department till date, then benefit of section 128A can be taken or not. If no, then the department can still recover interest. Sir, go to the department, raise your hands, tell them that you have a demand which is probable of with respect to interest, get the notice under section 73 and take the benefit under section 128A. So you have the responsibility of getting the notice from the department and then claiming the benefit under section 128A as well. That is something which I would practically suggest. So Madan Barve under section 11A, please include the non-levy of GST on transfer of leasehold rights. Definitely, if I was to be at that position, I would definitely include, but we will have to officially wait for the notification in this regard to be issued by the recommendation of the GST councils. So we will represent through the state finance ministers and also directly to the union finance minister to consider this subject, which is of utmost importance. So CA Kushal from Bangalore, section 128A is applicable only if tax payable is demanded in the order. If the order passed is only with respect to interest and penalty, will that be covered under the provisions or the benefit under section 128A? So in my personal opinion, I would definitely say that is also entitled to the benefit of section 128A. It is a beneficial provision. It is a beneficial provision, and the intent of law is to give relief from interest and penalty. Therefore, you should be entitled to the benefit of interest and penalty. Navya, you have any other stand on that question? A demand of only interest and penalty, no tax payable. Would I be?
Yes, I am certain. I am certain onto this. In my opinion, that 31st March 2025, the tax had to be deposited, and the assessee has willingly deposited the tax even before the order has been passed. The now order stands for interest and penalty. This is not an amnesty where the duration has been fixed, that let's say from 1st September to 31st March you have to pay. It is a closing ended amnesty. It says 31st March 2025 we have to deposit the tax, and then interest and penalty gets waived. So in my humble opinion, this case has to be read with an open heart and accept this belief, and relief should be given to all. In such case, where this case you are referring.
Great. So we get aligned on the same point. Next is PA Manmohan Mahipal from Jaipur. Whether relief under section 128A is applicable in the case of demand for reversal of ITC wrongly availed. Yes, benefit of section 128A even is with respect to ITC wrongly availed and also even wrongly utilized. Right? So can you provide recent update on demands raised by department on transfer of leasehold rights? Will it be covered under section 11A? Okay, this is again the same question, right? So CA Gopalakrishnan from Coimbatore. Sir, section 16.4 amended for all ITC or RCM only? Navya?
All ITC, sir. All ITC. It is not only referring to reverse charge, but it is to all ITC. Interplay between all the 4 years up to the November 21 is allowed, sir.
Great, great. So, CA Nazreen from Coimbatore, section 73 order has been passed. The department has recovered the tax, interest, and penalty directly from the bank. How to get the benefit of section 128A? In this regard, I would say, if the time limit for filing an appeal is still available, then you immediately file the appeal, and once on filing the appeal, the demand gets stayed. Once the demand gets stayed, you can get the refund which has been recovered through bank attachment, and then you will be able to proceed forward. If bank money is not actually taken, but it is only put on hold, matter is not to be much worried about. But if the amount has already been recovered, then the question would be there would not be any amount of payable interest, penalty, or tax as such. Then it might be a little tricky situation. But even in such a situation, if you have been entitled to the benefit of 128A, you can try a recourse by filing a writ petition before the court.
Correct. The next question is regarding the SMT 10 issued and order passed in the 79 informed DRC. Can we claim the benefit of 128A? I think, Arvind, yes, it can be claimed because
Yes.
this is the appropriate situation where the demand is pending and you must pay the tax and get the interest penalty waived off.
So CA Sriram from Kolar, vendors not filed the GST return, but we made all the payments to the vendor, and we have all the tax invoices also for 2019. We do not have the concept of 2B at that time, but officers block out the ITC if we go for appeal case. Will we be able to win at least in the appellate stage? Sir, with respect to tax not paid by the supplier, the restriction is due to the provisions contained in section 16(2)(c) of the CGST Act, and still as yet there has not been a relief given. But I would personally suggest you keep the proceedings live, because like this Samadhan scheme, like this relaxation to section 16(4), like this relaxation to the benefit of interest and penalty under section 128A, we will not be able to know when we would be able to get a benefit. So keep the proceedings live. So if the assessee has liquidity, maybe they can pay the amount of tax and make the interest stop. So that could be a very practical situation that I would personally suggest.
Appropriately correct, sir. In line with your view.
Great, thank you. So last of it, whether relief under section 128A applicable in the case of e-way bill penalty cases under appeal or litigations? The answer is no. So e-way bill notices are not notices under section 73 or under section 74. If an e-way bill notice was under section 74 and at least as an order, you could at least get the benefit. But otherwise, you would not be able to get the benefit of an e-way bill case under section 73 or the benefit under section 128A.
Yes. Correct.
So these are some of our interpretations of the latest through the Finance Act. So greatly, we have been able to close our part of the sessions on time. Navya, a closing remark from you.
Thank you so much, Arvindji. And I think it was unbelievably coordinated and appropriately taken at the right time for the right members. And I think members very well interacted and made it not only learning for them, but learning for us as a speaker as well. And I always said, and would be saying this again, that the members have been doing exceptionally when they hear the speakers patiently and not becoming a patient. So it keeps us motivated and pumped up about learning more and more GST with other dimensions and putting it all across the members. And once again, it is for me also it is wonderful experience.
Thank you, sir. Thank you both the speakers, my chairman ex Sancha and my vice chairman, especially the vice president sir, whose presence, whose auspicious presence has graced the occasions like this. Thank you everyone. Thanks for your valuable support and inputs. Ashokji, we can sign up for the day.